The Austin housing crash is officially canceled. Jeremy Knight tonight, your favorite Austin realtor. Look, the new housing data for November just dropped. And for all those people that said the Austin housing market is crashing, you were wrong. Yeah, I said it and I've been saying it for a long time. The housing numbers have just dropped. We're gonna go through those housing numbers. But first, I wanna go through the Fannie Mae and Freddie Mac outlooks for 2025. Now, we actually did a video on Real Migos not too long ago, me and Kevin, and we actually talked about the 2025 predictions. And a lot of you kept saying in the comments that it's gonna crash, that housing's gonna crash. I'm gonna tell you my worry for the Austin market first before we go into the Fannie Mae. When we're gonna go through the stats, but I think what we are gonna see is a hefty amount of inventory hit the market at the beginning of next year. We're gonna talk about rates in a second, but I think that means that buyers are going to have a great opportunity at the beginning of this year to get a really good deal on a property, and we're gonna go through that. So Fannie Mae expects the 30-year mortgage rate to average 6.7% into 6.4% in 2024. Volatility in rates may create a brief opportunity for buyers to lock in lower rates, but elevated averages will continue to hinder affordability. The biggest thing that you've been telling me in the comment section, and please comment below, do you think it's still way too unaffordable? I know a lot of people think it's unaffordable, and yes, it is for many, but that's not stopping people from buying, and it's not stopping people from getting deals right now. Fannie Mae also goes on to say they're expecting the forecast for total home sales to hit 4.25 million in 2025. That is a pretty significant uptick in sales next year. So that's overall sales. And we're going to talk about the Austin sales numbers here in a second. That is an improvement from 2024 at 4.06 million, down from 20.3% compared to 2019. So what we're seeing is more inventory, a little less sales, which means that buyers over the next year are going to definitely benefit from that. But one thing that they should always look at, and here's a chart right here. This is the chart that I have. So this shows you that if you're gonna be buying, the best times to buy are right now, the end of the year. December is the best time to purchase because as you see, we hit January, February, March, April, May, and prices continue to increase. Then they level off, come down a little bit. So the beginning of the year and the end of the year. So if you don't have a plan, if you're getting ready to purchase and you don't have a good plan, I would definitely start reaching out to your realtor in your area, or if you're in the Austin area, reaching out to us to set a good plan. Camera guy, you saw his new fresh haircut, comment about his haircut. He is in the process of looking at that right now. So let's go back to the Fannie Mae predictions. So what they're also saying is that the national home price growth is projected to be 3.6%. So nationally, we are going to see an additional increase in 2025 compared to 5.8% in 2024. Why do you think that it's not going to reach 2024's 5.8? Or why do I think it's only going to be 3.6? And I agree with Fannie Mae on this. It's probably going to be about 3.6, maybe 4-ish%. That is because we are going to see a lot of those sellers who have been sitting on the sidelines with a 2.5% interest rate going, I can't go anywhere. Interest rates are too high. They're finally getting used to that, and there's a lot of built-up, pent-up demand. Why do I say there's a lot of built-up, pent-up demand? Well, interest rates started dropping a little bit in September. And if you look at my pricing sheet on here, you see that prices have done nothing but from September, but go back up. Now, it's not a huge increases, but they are increases. So last thing on Fannie Mae, they're saying multifamily housing is anticipated to remain in a holding pattern throughout 2025 with limited significant changes. Rent growth is expected to be between 2% and 2.5% in 2025. So they're not expecting huge rent growth, but that is a slight increase. Now, if you think about 2019, rents have increased about 20% nationally. In the Austin area, they dropped about 4% at the end of this last year. So maybe we'll see rent growth in Austin depreciate a little bit more in 2025. I'm just curious what your thoughts are. But affordability conditions and challenges, they say in 2025, will resemble those of 2024 with mortgage rates above 6% and the housing supply below pre-pandemic levels. The question for you is, do you think that interest rates are going to drop significantly? I think more buyers are seeing stability. This is what we talked about with Kevin is more buyers are going to see stability, so they're going to start stepping back out in the market. More of those sellers that have been waiting are going to see stability, so they're going to step back out in the market. So that leads us to the Austin numbers. And you know that song by Dashboard Confessional that talks about vindicated? Well, we had an economist on our channel at the end of last year predicting 2024, and a lot of people called him a kook. He said that Austin was going to be plus 2% to minus 2%, but it wasn't going to be significant either way. Well, as we sit right now in November, prices for the Austin MSA, that's Caldwell County, Hayes County, Travis, Williamson County, is up 2.4%. Why did it increase from September? Rates have stabilized under 7%. Right now, they're about 6.93%. So we see prices in Austin are at $435,000 as the median. That's the MSA. But you say, Jeremy, you always like to talk about the Austin numbers. Yes, you are right and you are correct. The Austin numbers show us that we have gone up 2% in Austin again at $573,000. Now, I need to throw a caveat in here because I want to make sure that we say this. December's numbers could show a negative number just by looking at this chart right here. I love to look at charts. You should be looking at charts as well. So if we look at this chart, this kind of gives us the Austin MSA, and this is what we show our clients. So if you're not one of our private clients, you're not getting, when we're evaluating if a deal is the right deal for you, we're using a lot of this data to make sure the area that you're looking at, the prices that you're looking at make sense, because we want to make sure we get you the right deal. And oh, by the way, list price to close price ratio is about 93% right now. Now, that's not everywhere, but that's most places. So keep that in mind, that where things are listing in the Austin area, they're still selling about 7% below list price. But if we look at this, we saw that the Austin MSA ended the year at $443,000. So why do I think we might end up negative? I think it's possible we end up flat, but it's this right here, which is super, super important. In the last 30 days in October, we saw closed sales go up 9.2%. That means closed sales have gone up year over year from the last year this month. That means that more buyers jumped in the pool because they saw rates coming down. They saw the election was finally over, so they're back in the pool in November. So what does that mean? That tells me that prices might go up. They might come down a little bit because, I like to have good stats, right? Jeremy, what are the overall stats for the number of homes selling in the Austin MSA under 500K? Well, I would tell you it's 62.1%. 62% of the homes are selling under 500K. But Jeremy, the median for the US is $435,000. Glad you brought that up. 51% of the homes selling in our MSA are under $435,000. And guess what? 37% are new construction. So new construction don't make up the majority. Resales still do. So if you're a home seller out there and you're getting ready to sell, that's what you should be listening to. Yes, in specific markets and specific spots, you are in a position where you're going to fight with builders. So that's why I've always said in this channel, be careful when you're buying in a new construction neighborhood. Know the tax rates, know what you're getting into, know how long those homes are going to take to build out. These are conversations we have with our private clients. Again, if you want to become a private client, most of them reach out through the description. We've got a phone number and a link that they can jump on there. But here is what's also interesting. New listings are down 7.9%. Pending sales are up 29.7%. Let me say that again. Pending sales in Austin are up 29%. That means more buyers are getting back in the market right now. That's Austin. Let's go back and look at the MSA. The MSA, 16.7% up. Now, if you'd like me to do another video about which markets are seeing the most price appreciation versus depreciation, drop that comment below in the comment section because I'd love to give that to you. But overall, we're seeing active inventory, new listings dropped in the MSA 2%, and homes are selling about 92.7% close to list price ratio. This is all really, really good information for you. I'm glad you said, Jeremy, we like good information and are going to reach out to you in the comment section, because that is what most of our clients are due. So the question is, what's going to happen with the Fed funds rate? Okay, quick little update here. Does look like we did lower the Fed funds rate 0.25%. Jerome Powell came out and basically gave a hawkish look into the future, that they're not going to be dropping rates as much, and that actually sent the stock market into a tumble, which then turned and had interest rates for mortgages go up, because again, they follow the 10-year treasury. So what we saw is they went up immediately, and then they've actually started to come back down. They went up to 7.14, now they're down about 7.04. So look to those to potentially drop. I still believe in some of the things that we said in this video. I just want to give a quick little update that is what happened. So we may not see rates be cut by the Fed for the Fed funds rate, but still look for rates to potentially drop. Are they going to drop significantly under 6%? That's going to be the question for 2025. And what do you think so far? Do you think that this is good information or not? You drop a comment, let me know. If you want more information about this, drop a comment below. If you want to see one of the neighborhoods that you should be looking at, it's going to be right here. If you just want to reach out to us, if you just want to love on us, hit the like, comment, share this video with a friend, because your friends want to get this information as well. What do you think? We'll see you in the next video.